Jeff, Zach, thanks for joining me.
Hey,
I
Steve.
stayed.
Thanks for having us.
Hey, we are talking a topic right up actually Jeff's expertise, debt in real estate. And if you are interested in commercial real estate investment topics and trends, subscribe to our newsletter at selectfincap.com and you also get a look at exclusive commercial real estate investment opportunities. But on to the news. We have seen Blackstone come out this past week offering an $8 billion commercial real estate debt fund. They are seeing opportunity in this space, including opportunity in taking some real estate debt off the balance sheet of banks that got a little bit burned or a little bit worried. But Blackstone obviously sees an opportunity here, as well as it's breathing some more life into the real estate debt market as we see more investors showing interest in this segment. A bit of a turnaround here, a bit of a change in the debt market. Let's start with you, Jeff, as you know, you got more than a little experience in
Yeah,
real
yeah.
estate debt.
I've done a little bit of this stuff over my career. Look, I think banks have been screwing this up for a very long time. You got to add the other, I almost want to say insult to injury, but you've got outside auditors, you've got other, alphabets that are, overlooking and seeing what you're doing and trying to make sense of your decisions. And really, a lot of them are business decisions, not financial decisions, and it all just kind of gets in the way. Somebody who's like a Blackstone or even just smaller private debt funds can come in and do this because you don't have deposits that you're having to deal with. You don't have other large investment banks that are sitting there funding the stuff that needs you to be audited and all the rest of the stuff. You can come in and do deals, do them quicker, at better leverage that's acceptable in the market, at rates that are above market rates, and get deals done quicker. People are going to jump at it. And that's ultimately, I think, to some degree, what Blackstone has seen is be more efficient, close quicker, and get deals done and capture a large or even a small part of the market. At $8 billion sounds like a lot, but in an annual industry that's in the hundreds of billions, 8 billion is nothing. So I think there's a lot
Trillions.
of opportunity in this market or in this industry.
I was going to say the lending is trillion, and not
Yeah,
hundreds of
well,
trillions. It's in the trillion. So eight billion is
yes,
going to be it. I hate to say it, a drop in the bucket,
that's right.
but
I mean,
I
it's
agree
almost
with what you're
nothing.
saying. Yeah. So I mean, they identified an opportunity, and what do we always say, Jeff? We want certainty too.
Yeah.
Banks suck. They haven't gotten anything right for probably a long time, and it caused like the first recession, and then went too far the other way, and like screwed it
Well,
up. And
it ends up being kind of the thing I always say is banks end up with paralysis by analysis. They look at it and are trying to look at every angle and figure out business decisions instead of making really fundamental lending decisions. Here's my leverages, here's what my rate is, and move on.
Well, here's one place where Blackstone, I think, can see opportunity where banks only see risk. And that, part of this is going to be focused on properties that financed at low rates have seen a drop in values of the property. And the property isn't actually modeling out enough to refinance it just based on the value into this higher rate environment. So whereas a bank kind of, sees that as a problem, I think, a Blackstone sees that as a potential opportunity to, potentially even acquire properties on terms with owners that are kind of have their backs up against the wall.
well, I saw a property today that is it's a property I've known about for decades. And I love the property. It's finally for sale, probably for the first time in decades. But you got to look at the financials and what the seller wants for the property. It does not model out. Interest rates today are at the 7+% for stuff that's not multifamily, and stuff that's multifamily is still in the sixes. If you look at this property, it doesn't have enough income to support the debt right now, unless it is structured properly. However, the value of the property is easily double or triple what you're buying it for. So that's where a Blackstone can step in and say, look, we'll give you the 6 or 7%. We'll build you an interest reserve. We'll give you the time to get some of this done. But if you screw up, we're going to buy something at 50 cents on the dollar.
Yep.
And no bank would even look at that.
Look, I've said that for years. On the side when I was managing the family office, my leverage point was the most most pinnacle really thing that I was looking at, and primarily because if I lent the right amount of leverage to a borrower, they messed up. I was at 50%, to Zach's point, 50 cents on the dollar. And, I was gonna make make the family office a lot of money. And I think people just, don't really understand that banks are lending out depository funds, and then, they've got somebody looking over their shoulder that want, for the time that it takes them to get back through foreclosure and everything else, and having to deal with all of the legalities of it. They're not paying their, depositors money. They're not doing everything else. And then once they have that property on the books, they've got less than 2 years, or a little over 2 years, somewhere in that range. Let's just call it 2 years to sell the property.
Yeah, well, and I
Otherwise
think
they can't
this.
do anything.
Well, and I think here's the
Uh,
good news and why that 8 billion is just a drop in the bucket, and it's only a small part of the market. It's because these guys are getting these deals before we get a shot at them. So this is exactly what we like to see. Is we like to see a property come in the market that's a quality property that was modeled wrong. It doesn't really wasn't structured for debt right, and now they got to sell it, and we
That's
potentially get a
right.
buy. So what they're just trying to get in there before we can get a shot at it. But because it's only 8 billion in a trillion plus market, there's still plenty of these opportunities I think we're going to be seeing in the future.
well, we miss one point. Where are my entrepreneurs at? Where are my self-employed people? Where are all of the people on the residential side? They're not financeable, right? As soon as you look at that kind of stuff, anyone in the tech world completely understands this. Any small business owner understands this. You don't have a W-2 income, banks won't touch you there either. So there's another opportunity that Blackstone is capitalizing on is high quality borrowers that are overlooked by a broken banking
Yep.
system.
Well, the other side too is you're talking about $8 billion of a real estate debt fund. That's $8 billion to fund loans. That's probably going to be on somewhere between 14, maybe, well, let's just say 13 to probably $16 million worth of total real estate, right? Because you're going to have leverage that's anywhere from 50% to 65% leverage max. So, $8 billion could make them another $8 billion over the course of a year, or 2 years, depending upon their debt and the terms they're providing. So there's a lot of opportunity there.
Okay. Well, fun conversation on real estate debt, guys. I actually mean that seriously, and I hope that folks enjoyed it. Give us a thumbs up, subscribe if you haven't. And once again, visit the website, selectfincap.com, get on the free newsletter to see news like this and look at exclusive commercial real estate investment opportunities. Thanks a lot, guys.
Thanks,
See you,
Steve.
Steve.